facing criticism, though not terminated for cause like Carrie Tolstead was.
Okay. Wilf, we appreciate it, and we look forward to that interview at 11 o'clock this morning. Thanks so much. In the meantime, we're going to talk energy. Syria, not an energy player, but its proximity to major oil producers means the unrest there could spill over to others in the region. Joining us right now is Stephen Schork, editor and founder of the Schork Report. Did I explain that properly, Stephen?
Oh, absolutely. We're talking about Syria, a country that the EIA ranks as the 66th largest producer, up there with other heavyweights like Poland and the Ivory Coast. So obviously this is an insignificant player, but as any real estate agent will tell you, this is a bullish headline because of location, location, location. So we have the United States, which now is responsible for about 15% of the world's energy production, now dropping bombs in an area on a country whose puppet masters in Tehran and Moscow are none too pleased. So when we add Russia, Iran, Iraq, Saudi Arabia, so forth, we're talking about bombs being dropped in a region of the world that accounts for about 60% of the world's energy production. So clearly this is a potential black swan, something that is very difficult to try to sell against.
Okay, so play that out. Sort of walk us through the permutations, if you will, and how you then handicap them.
So absolutely. So let's go back to OPEC, right? So we had the OPEC surprise announcement in November. And in between November, December, January, Wall Street went all in on higher oil prices. They made the wrong bet because oil prices, while we did get above $50 a barrel, we kind of yo-yoed in between $50, $55 a barrel. Wall Street took unwarranted risk, risking about $12 on the upside to every $1 to the downside. And hence, in February and most of March, the market fell, or the bottom fell out from the market, and we got down into the mid-40s. Now, we're at a point of the year when you expect oil prices to strengthen. We're coming out of the turnaround season. So here in North America, we've already added 900,000 barrels a day of demand to the market. We're going to add another 600,000 barrels a day by the time we get into July as refineries start to ramp up for the summer season. So from a demand perspective, we certainly have a bullish trend that began at the end of March, and I would suspect it's going to continue into the driving season. So you add to that the fundamental real demand coming into the market, and now the potential. Now, I do think it is remote, but it is the potential that we could see a greater conflict arising from this. And that, of course, is going to have the market on edge and probably will invite our friends on Wall Street to jump in again to take bets on higher oil prices. Now, on the other side, we have production. Of course, oil rigs here in North America have doubled since spring. We're now looking at production at the highest level since January of 2016. And according to the EIA, by the end of this year, production in the United States will once again be challenging the modern-day record of about 9.4 million barrels a day.
Okay, so bottom line it for us. What do you do about it?
So right now, we've been bullish since the mid-high 40s on our daily report. I do suspect we're going to stay up around here. I do not think we're going to get much above the mid-$50 range in the spot market in New York. So certainly we're right in that middle area. So I do expect the market to remain firm in that $50 to $55 range, not outside of an untoward event, a black swan, again, Syria, blowing up and really cutting off supply. Cannot see prices going much higher than the mid-50s. And then certainly once we get through into the third quarter, when the demand season begins to ebb, then I would expect to see prices migrate back down into the mid-$40 range. Okay. So I like oil buying in the mid-40s, selling in the mid-50s.
Okay, Stephen, appreciate it. Great to see you, sir.
Thank you.
Thank you.
Thank you.
Coming up, former New Hampshire Governor and White House Chief of Staff John H. Sununu joins us after the break. And later in the program, Allianz Chief Economic Advisor Mohamed El-Erian joins us with his latest take on the economy, the Fed, and much more.